today's quiet, but that's okay because it actually gives us maybe a day to, I guess, prepare for everything that's going on this week. Let's break it down for just a second here. What we've got is the U.S. Consumer confidence coming out tomorrow. We also have JOLTS job openings tomorrow, which could be big. So Tuesday, decent activity day, but then Wednesday is really the big day. July 31st, Wednesday, is the Fed meeting. So we have a Fed or FOMC press conference and the FOMC statement and some decisions on the Fed funds rate. Expectations are not for them to cut interest rates this time around, but the expectation or consensus right now is that they'll cut in the September meeting, which is just obviously a few months away. So we are getting closer to rate cuts. And I got to say that there is a slight, very slight possibility that the market could see a bit of a surprise here from the Fed on Wednesday. What I mean by that is that there are some people who think that the Fed is actually going to make their first cut on Wednesday. I don't think that's likely, and neither does the market. Although we have started to see some signs that the jobs market is cooling, there's no like red flags, serious red flags going up that I can see. We are just starting to see the economy actually feel the effects of higher interest rates, which is what needs to happen in order to really squash inflation. Now, inflation has been trending lower. So if we get another round of good inflation data and, that would be signs that I think are really a cut in an interest rate cut in September would be really appropriate. So I think that the Fed will likely wait. They probably won't go a rate cut this week. If it happens, it would be a huge surprise, but it's possible. But I think that they will probably wait for one more round of inflation data to come out to really solidify that inflation is coming down. So if we take a look at inflation data for just a moment, you can see where we're at with this. We've come down a long way. Inflation went sideways for a little while, and recently the market has been really excited about the idea that now inflation is coming down again, which is great news, right? We all want inflation to chill out and not be so, painful for all of us, right? Inflation is a painful thing. Prices rising fast is not fun. So inflation on a year-over-year basis, this is the CPI year-over-year reading. We've been seeing a nice resumption of that downtrend in the year-over-year inflation rate, which is good news. The question then becomes, can we see that trend keep going? Can inflation continue to normalize back down towards the 2% level? And I think, although we've had a nice start here to the trend, my opinion is that the Fed is not going to cut interest rates this week. Very unlikely. Possible, but unlikely. I don't think they will. And they're going to wait for a little bit more data. And as long as inflation looks to continue in this momentum to the downside trend, then I think will probably cut in September. The exception is that if we see inflation have just a terrible turnaround really quick, if the next reading, if the next CPI is like this and the next CPI is like this, then they may not cut interest rates in September. But the trend right now seems to be our friend, right? Inflation seems to be trending lower. So as long as we can see, inflation continue to trend lower, there's a good chance, I think, that we see a rate cut in September.
Our summer software sale is happening right now, which means you can get the Edge Finder for 50% off. COT data, top setups, pages of fundamental and technical data, and so much more. Our software is constantly scanning for new data and information and is updated regularly. The Edge Finder is a one-time purchase, which means you can get it half off right now and never have to pay for any updates made to the Edge Finder software. This limited time offer won't be around for very long, so don't wait and get this incredible trading software for half off before it's too late. Check out the link being dropped in the chat now to talk to one of our team members about our huge 50% off summer software sale.
So how do you position for that? Well, I've been on the side of rate cuts for most of this year to varying degrees. This year I've spent a lot of it bullish on gold. I still think that gold has potential to stay bullish. So if we're talking gold for just a second, where are we at with gold? Gold started out this year ripping to all-time highs, right? So 2024 started, we went sideways, and then we just took off running and really made a big push to nominal all-time highs. We then made new all-time highs. Then we made new all-time highs just recently. We've come back down since then. Price action has really stalled out up in these levels. And so for me right now, with this consolidation phase, I'm just kind of on the sidelines. There's just other things that I'm trading right now. I've made a lot of good trades, some not so good trades on gold this year, but for the most part, I've been on the bullish side, which has been the correct play. So we'll see if that can continue. To the upside, I do think that, like I said, I think that rate cuts coming will be good for gold. So it is possible that you see something like this start to form. And if that happens, if we see the breakout through the highs, I will definitely be looking for bullish opportunities on gold because I like the setup. I just don't love the price action right now. It's really, really gone sideways here recently. I may be interested in trying again on gold if, or getting back into a bullish setup if we do get a pullback down to the lower 2300. I've made several different attempts at this level this year and made money most times. So I bought gold over here. I bought gold over here, which many of you guys might have remembered the legendary turnaround trade. I had some not so legendary trades. I got stopped out over here. I got stopped out over here. So I had some losers and some winners. I caught this area. I caught pre-run up. I was in gold, which took off running. I stayed in it all the way through that. That was one of my best trades of the year as well. So where am I at with gold? Well, I'm not loving the choppy price action, but I am bullish overall. So if we get a rollover down to like 2300, I'll probably try again, as long as I can find the right setup and confirmation on the edge finder. So short term, I don't know. It's really looking choppy. It could trend lower again for a little bit, but I still like the overall setup for bullishness to continue this year. So we'll see. The other scenario would be if we just run up and take out these highs. Like if I'm just wrong about this and we just see this thing, well, not wrong, I am bullish. I'm just not entering a trade right now. If I miss this move and we just run through the highs, then I will definitely be looking for pullbacks to play into on gold. So there's my overall view on gold. The dollar index is also up today though. So this is a little bit of a pushback for gold bulls because you do have the dollar index trending higher here on the day. So again, here's your 15-minute chart. You can see the dollar has been making a push higher and seems like we had a little bit of a fake out there on that 104 level. I was pretty shocked to see, or not shocked, but I was pretty excited to see the dollar break that 104 level for the first time in months. And then you can see that ended up being what looks like a little bit of a stop hunt or reversal or fake out, whatever you want to call it. Doesn't matter. I would just call this a fake out, right? Price tried to move lower and then it was a big whoops, never mind, we're going back. So from here, you know, that's a little bit price action wise, a little bit concerning. I'm still more bearish on the dollar than bullish though, because again, I think rate cuts are coming. I think the labor data is starting to cool, right? We've talked about that before, but just for my maybe newer viewers really quick, job openings in the US trending down, right? Unemployment claims have been slowly creeping higher, right? So let's do 180 here, apply. So this is 180 days of unemployment claims, right? Each week. You can see it's been slowly trending higher. Unemployment rate has also been trending higher. So again, I want to reiterate when I show you these data points, these are very low data, right? These are not bad data points whatsoever, but they are trending in the wrong direction, right? Not the good direction. But it kind of depends who you ask. Like the unemployment rate is trending higher, which is good for rate cut, you know, desires. If you want interest rates to get cut, then you want to see unemployment rate just slightly trickle higher. But again, let me reiterate, as I have many times on this show, we're not at crisis levels for unemployment rate. We're just off the almost all-time lows. I think these are near all-time lows. So, you know, unemployment rate just a bit higher now, and there is some concern there that now it's starting to trend in that direction. But again, I don't think we're at red alert levels. Let's keep moving. So in terms of top setups today, we got the Dow. I do want to just remove minor currency pairs for a moment. So let's take a look here. This is what we're currently working with. And if I take out neutrals, we've got kind of a slim watch list here today. DXY lower, but then went higher. Oh, yeah. I don't really have any DXY trade setups right now, except for dollar Swiss. That's the only one. And dollar Swiss is doing okay. Not following quite nearly as, like other dollar crosses are really moving. Like, look at dollar CAD, my goodness. Pound USD. Look at the euro. Wow. So anyways, my thought process here with top setups today, dollar yen's giving us a bearish reading, which I thought was interesting. The Russell giving us a bullish reading, 10-year treasuries, Bitcoin, UK 100 is a new one. We got to look at that one. USD CAD and the Dow Jones. So got some bullish and bearish readings here today. I do want to take a quick look at dollar yen. So we take a look at dollar yen. We are breaking some support structures, but I think for me to short dollar yen, I have to really be in a risk-off state, and I'm just not quite there. So although the edge finder is leaning bearish on this one, this is probably not going to be a setup for me. Though commitment of traders data showing some slide the other direction. Maybe some big buying of the yen occurred. Let's look. Let's look at what Smart Money did recently. Let's have a look. So here's the latest commitment of traders data, and wow, they bought the yen heavy. Look at this. Whoa, this is really interesting. So the commitment of traders data lets us look at what institutional money is doing on a week-to-week basis, according to CFTC's reported weekly commitment of traders. So what we see here is on the weekly filing, the latest development shows a huge change in long contracts and a huge change in short contracts. This is really interesting. Look at how much, so they drastically reduced short positions and they dramatically increased long positions. That's pretty bullish for the yen in the short term. A huge net change in the direction of bullishness. But remember that this is also this might be a little bit of a short squeeze or an unwind of the shorts that was, we've talked about the unwind of the carry trade. The institutional money here is very heavily positioned on the short side of the Japanese yen. But what we see in the latest commitment of traders filing is a bit of an unwind in that. You can see a huge increase in long contracts and, even more importantly, a massive covering of shorts. Short contracts got covered aggressively in the latest commitment of traders data. Very, very interesting. Very, very interesting to see that. I didn't notice this. At the same time, they went long the Nikkei, which is interesting. SPX, pound. If you're somebody who watches gold, they sold gold, they sold silver, sold CAD, copper, Dow, NASDAQ, Russell. Seems like a bit of a risk-off week for the commitment of traders data. Very interesting to see that. Let's see, what else can we talk about? So dollar's up today. S&P was up. It's given back a little bit of those gains. The NASDAQ, I am long the NASDAQ. I'm also long the Dow, which just Uno reversed on us. Look at that. We were in the positive, now have come back red. So slightly red on the Dow. We're positive on the NAS. The VIX is up 4%. Silver is slightly higher. Gold slightly higher. Oil's up 1.3%. Hi, Nick. What is a carry trade? Could you briefly elaborate? Yes. So different central banks offer different interest rates when you hold or different base interest rates, right? The Fed has a federal funds rate of 525 to 550 basis points, which is 5.25 to 5.5%. That's the rate at which they lend out to banks, and then banks lend it out to us, right? So the central bank has a central interest rate. And so when you look at globally at different central banks, the Japanese yen has a very low interest rate. So when you see Japan with a low interest rate and the dollar with a higher interest rate offered, people go and they sell their yen and they go buy the dollar. That's been a prevailing trend for a long time here in recent years. But then recently, people start to question, what's coming next. They know that the Fed is likely to cut interest rates. They also think there might be global recession. And Japan is notably a country that has a pretty stable economy, not a super fast growing economy, but a stable to a degree economy, a pretty predictable economy. So if people are feeling concerned about the future, they may rush back to buying the yen because the yen is stable, right? It's generally, we know what to expect with the Japanese economy, but we don't always know what to expect with European economies or the UK specifically, or like the US. Like those things can enter into, Japan can enter a recession too, but it is more predictable to some degree, at least in the eyes of the market, compared to other places. So people might be selling yen and then buying dollars to collect positive interest rate. But if they think that there's going to be a global recession, they might do the opposite. They might say, okay, I'm cashing out of those dollar positions, or US real estate, which they may have used dollars to buy. They might sell risky things and go back to the safe things. That is what is considered the carry trade unwind. So recently, the stock market sold off pretty hard. Not really hard, but we saw a little bit of a dip. And so market participants might be saying, let's be careful here and go back to the yen or sell stocks. Or another way of saying that would be, get out of just anything that is super recessionary concerned or so on and so forth, right? Maybe go into gold, things like that, the more risk off plays. That being said, there's a mixed bag here because it doesn't fully hold water. The market didn't see just a full-blown risk-off move because last week we saw things like real estate, XLRE is what I'm looking for. Real estate did really well last week, which is a traditionally risk-on kind of asset, right? People buy real estate and invest in real estate when things are going well, and they're scared of it when things are going bad. So a bit of a mixed sentiment in the market, it seems like. Not to mention today you've got the NASDAQ up and the blue chip stocks, the safe ones, quote unquote, the Dow actually down. Top setups wise, I am still long the Dow. I've got a bullish setup on the edge finder that I'm watching. I am already in the trade. I entered that one last week. I'm also watching Bitcoin. I want to take a quick look at Bitcoin because I might be wanting to take a trade on Bitcoin. Let's see if we can find. So we're doing this thing that I talked about last week. I missed this one twice, which kind of stinks. I was looking at Bitcoin. I wanted to take a long position on a trade and didn't quite get the setup. But now, so I was looking for this setup and I totally missed it. To be honest though, I saw this price action going on, but I was waiting. And I didn't get my entry. So I didn't enter this trade, even though it was beautiful entry. Bitcoin is like the ultimate risk on, in my opinion. It's a risk asset. And Bitcoin Super Bowls or Bitcoin, fanboys and girls would probably not like my statement on that. Because if you call Bitcoin a risk asset, what you're saying is it just trades directly with other risk assets, which is frustrating to true crypto believers, because if Bitcoin is really resilient, it shouldn't matter what the stock market is doing because it should just be a store of value, right? If it's a store of value, it shouldn't be so subject to emotions of the market, right? The stock market. But it is. It's very, very sensitive to what's happening in the stock market. And generally speaking, when you see high risk stocks going up, Bitcoin's going up. And when you see high risk stocks going down, you see Bitcoin going down. So I am not a crypto, ultra believer per se. I do think it has a place in the future. The technology is amazing. So I like Bitcoin and I like the idea of having a little bit of it in my portfolio and trading it on the long side when I can. But I would not say I'm married to the idea that Bitcoin is the future. I'm not that guy, and I don't think you have to be that sort of level of a believer to trade it. So I'm looking for something like this. If you get a pullback here, I do think it has room to continue upside, and I do still stay on the risk on side of things. So that's why I mentioned with the yen, I can't really buy the yen because I'm more on the risk on side of things. I think that we're going to see going into the rest of this year during election, regardless of who becomes the president, I think that there's going to be a lot of fiscal spending. I think that there's going to be continued, tech trade revival. And I might be so wrong about this, but I don't think the tech trade's over, right? A lot of people are saying, oh, these companies are too richly valued, they can't keep going. But I think CapEx for these big companies, right? The spending being done on the AI trade, the risk to not spending enough is greater than the risk to spending too much on the AI investment. What do I mean by that? Well, I think big companies are going to continue to spend aggressively to stay at the forefront of the tech AI stuff. That perpetual spending could end up being a big bubble, but I don't think the bubble is ready to pop if it is a bubble. Okay, what I mean by that is, again, I think that these big companies, they have so much money available to them. Apple has so much money. Google has so much money. Microsoft has so much money. So when you ask me why are you long the NASDAQ, it's because I think these companies are going to continue to pump money into the AI trade really for years and years to come. But with this recent dip, I'm a buyer because I think the tech trade is going to go a lot longer than people think it is. And if I'm wrong by that, I'm not going down with the ship. I've got to stop loss in my trade, but I think it has upside. And I don't think that, if we get a 10% pullback in the S&P 500, I will love that. If we get a 5%, which is about where we're at, right? The S&P pulled back just 5%. I'm a buyer at 5% discounts, right? Because I'm bullish and I think bull markets dips get bought. So if I'm wrong, I stop out. It's not the biggest deal. It would not be the first time I'm wrong, and it certainly will not be the last. The cool thing about trading is you get paid to be dead wrong sometimes on the long-term scale, right? Sometimes you're right, sometimes you're wrong. As long as you're making more when you're right than when you're wrong total, that's how you make money in trading. Trading is not about being right all the time. I'm not a forecaster. I'm not a crystal ball owner, is what I like to say on the channel. I am simply weighing probabilities to the best of my ability. I'm using the tools that I use on these videos every single day, the Edge Finder, and I'm doing educated guesses and managing risk appropriately.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.